What's your biggest learning of embedded finance over the past few years? For me personally, it's that non-financial brands that are just launching but not embedding financial products are failing. These companies believe that purely their brand will drive usage to the financial offering. Maybe that worked some years ago, but not anymore. Instead, non-financial brands need to figure out and solve the jobs to be done of the customers. That's the topic of this podcast episode where I'm speaking with Paul Staples. Paul has worked in embedded finance for many, many years. Most recently, he built the embedded banking offering at HSBC and Clear Bank. I'm speaking with Paul about how the industry has changed over the past 5 years, what kind of companies can succeed in embedded finance, and how he expects incumbent banks to react. My name is Lars Markull. Welcome to the Embedded Finance Review podcast. Every 2 weeks, I'm interviewing the builders and shapers of embedded finance. And now let's dive in. Hi, Paul. Welcome to the podcast. I'm glad to have you finally on the show. How are you today, and in what part of the world are you located right now?
Yeah, lovely to see you again, Lars. Yeah, it's been a while. We've been promising to do this, so finally we've made it happen. So yeah, I'm based in Hertfordshire in the UK. Finally, we've got some nice spring sunny weather. So yeah, it's a nice part of the world.
And yeah, you told me in the pre-chat you are pretty busy right now doing a bit of work at your home, so that's the right time of the year.
Yeah, good time of the year to get out in the garden and start doing all those jobs I've neglected for the last 6 months or so.
There's probably a lot of interesting stuff to talk about that as well. What we want to talk about here is obviously the topic of embedded finance. And obviously, you with your background, you've seen quite a bit, but maybe to kick things off, in January 2020, I think it was, when Angela Strange published her, let's call it, at least in the industry, famous blog post or article that every company will be a fintech company. So that was January 2020. Now it's a little bit into 2025. So 5 years have passed since that post has been published. It maybe was not directly the starting point of the embedded finance movement, but it was definitely start to a specific wave. So quite curious to start things off to hear your thoughts. What has happened in the last 5 years? How do you think the industry has performed? And what your overall understanding is of where we are right now?
Quite a lot to unpick there, to be fair, Lars. So I think it kick-started the language of embedded finance as opposed to actually kick-started what embedded finance and embedded banking was all about. You go back to 2011, there was conversations already going on around how APIs could decompose a bank and make them surfaceable in different platforms and products out there. The actual story around Angela and saying every company could be a fintech, never really liked that phrase. I thought it was a bit of a headline grabber, which the building personal profile one would do. But I think it's actually every company has the opportunity to utilize. I think it's the opportunity and the utilization, which are the missing words in that. You can't see a gardening company becoming a fintech. I can't see a car cleaning business becoming a fintech. Where I think she was going in her head was, if you're a tech company, you could become a fintech or pivot closer into fintech. But it was a massive oversimplification in that sense. And I think what we have seen is the simplification of banking into its primitives. We've seen the opening up of accessibility to use those primitives. And then we've seen an increase in creativity of where people are looking to use those things. So you need those three things to stick together to ultimately come up with then the adoption and utilization of fintech in non-fintech environments. But I mean, for anyone who's seen me give lectures at University of Harvard and Cambridge and Lucerne, one of the things I always talk about is actually embedded banking is nothing new. And I joke with a class a couple of months back now that actually the Medici family in the 1400s founded embedded banking because they put the bank in the marketplace. They took the bank to where the customers were, as opposed to the customers coming to the bank. And when you think about it, that's all that we're doing when we talk about embedded finance and embedded banking. We're simply putting the financial products and the capabilities where the customers are, part of their ecosystem, part of the journeys of transacting that they're going through.
I do agree with you. I mean, maybe touching on the Angela Strange article, I think it's a fair point that it needs to be like a headline grabber. I think my main question, you said like utilize and access is missing. I think my understanding was always a little bit like it's an opportunity, as what you said as well. It's basically, it doesn't mean that all of the main revenue of your company is coming from fintech, but basically it's an opportunity to monetize that well. What you said right now, like obviously embedded finance, and we all know the embedded finance use cases that have been around for decades. maybe not as long as like 1400, but still a couple of decades maybe. What do you think then, like, why is it so hot in the last 5 years? I mean, obviously the features of embedded finance have been around, but the term has been used in the last couple of years. Why do you think is that?
So I think the last 5 years has become a bit of I'm not going to say a hype curve, because I don't think we've gone through the full hype, but we've certainly gone through a bit of buzz on that. I think there's been an arms race almost as to what's the right approach to this. And you and I have debated over time the multiple layers within embedded finance. It's not a one size fits all, and people have got different roles to play in it. I think for the last 5 years, we've also seen software as a service, be that vertical or horizontal, and to some extent marketplaces and platforms, all hitting a kind of point of economic maturity with their existing product offering. So once you've hit that product maturity, and by that I also mean geographical expansion maturity as well, where do you go next? And the growth has been so rapid that the investors are now looking at it going, well, hold on, what's next? What do we do next? And then there's been cases out there, and everyone talks about Toast and those as cited examples of all of this. They're a great poster child of how they wrapped up financial services as part of their vertical SaaS stack. And the claim statistic is 80% of their revenues come from financial services. So everyone's kind of followed that lead and gone, well, let's expand our offering. We've got this huge pot of customers. Our software as a service solves a series of problems. Where are the handoff points in our software into the financial community? Can we bring that handoff closer, or remove the handoff altogether, or remove that friction? And in doing so, we've seen the birth of all these companies who are able to solve for a number of those problems. So that's why I think the last 5 years has seen a huge growth in this. But I think also we need to go back to why banks have been part of this journey as well. It's not just intermediaries, but banks have been part of this journey, because banks are essentially dumb balance sheets now. Huge amounts of capital to deploy. How many current accounts, how many bank accounts do you ultimately really need as an individual or a business? So therefore, banks were looking to make themselves useful again. They were useful on the high street because each night people would deposit their takings at the bank. They were useful. It was a safe place. But now banks needed to kind of rapidly find new ways to get their product and their capabilities, these primitives we mentioned earlier, out to the masses, new distribution channels. So the banks have driven hard into this, arguably through their commodification, if you will, and the base layer of this whole spectrum. And that's because they need to find new markets to get into, and they need to get to customers that are kind of going into new venues of activity. So they've said, right, the banks will push. They've had all this dry powder to do this as well, invested heavily in their API stack and their processing stack. And then created these partnerships that you see out there with the likes of the car companies, the retailers, the aviation industry, and the ERP systems as well. So that, I think the banks have perpetuated this in the last 5 years as well.
So basically what you're saying is, looking at an embedded finance product, you always have the two sides, the embedders or the non-financial brand, and then obviously the, let's say, infrastructure providers or banks on the other side. What you're saying is that both were kind of finding, not at a dead end maybe, but kind of that their original path was not able to continue in the same way. And now matching both together is basically opening each side access to potentially a new group of customers, or on the other side, new revenue, new monetization possibilities.
Correct. Yeah. But I think the story of monetization and revenue development out the back of the revenue growth out the back of this, there are limited success stories in this. You yourself posted today about one that was less successful, and there was another shutdown out in Indonesia in the last month or two. I think what we're finding is both parts of the puzzle had a problem. Yeah. Both of them are kind of coming together going, maybe we can solve this together. Arguably, there will only be one winner, because only one of those two has to own the customer. One of it's going to be the financial ownership and the regulatory ownership. The other is going to be the experience owner of that customer. But unfortunately, I think we still see that tussle. going on at the moment. And as soon as both parties, the infrastructure and the embedor, start to recognize that, then we're going to open up and actually see wave 2, if not wave 3, of embedded finance and embedded banking coming together. And I think that's going to be really around not revenue opportunity, but cost efficiency opportunity coming out of this.
That's interesting. I mean, like what you mentioned right now, I mean, follow-up question on your statement where you said that the customer of the banking user is in a way the customer of the non-financial brand and also the financial institutions in different ways. When I take a little bit step out of the pure embedded finance, I will always look at these co-branded cards products, whereas it's even more evidently from my perspective. I mean, here in many countries, we know Amazon has partnership with specific financial institutions to offer the Amazon co-branded cards. And I think there's even more obvious where like you have like, I don't know, 2 portals. I use Amazon for my shopping and e-commerce activities and everything else. And then I have a separate login for my Amazon credit card, which in a way feels a lot more like a financial institution product and not so much like an Amazon product. They get better, but still I would say they are not even as close to the same level. And for me, this is maybe not a pure embedded finance example, but what you're saying as well, we're seeing the same in the embedded finance world where the customer is kind of like in between these 2 providers. And I guess this is also where most of the friction creates. But then my follow-up question is like, you said a little bit like both sides have to figure out or find a solution for the next wave to be initiated. Do you see that happening? Like, do you see providers who are kind of like cracking this problem and can potentially embark on this new wave?
So I think I'm starting to see green shoots, and this is probably the way I would describe it. I don't think I've seen anyone completely crack it. But a lot of this is a timing issue as well. Is it top of mind? Is it a boardroom issue to deal with? Is it those sorts of things that are driving this kind of second wave, right? The telco industry has seen success in this. I caveat that massively because it's very, very geographic specific. And that's probably a point we can touch on shortly around the geography of embedded finance and embedded banking propositions. But if you look in Eastern Europe, where there is a massively underbanked community, digitally underbanked community, it was quite an obvious thing to do to marry up a telco and a bank to support each other. The telco wanted to distribute more handsets. Well, you need credit to do that. So they wrapped up the credit with the handset and then put banking apps directly in the handset when it was turned on. Lo and behold, the customer now has digital banking with the handset tied up proposition. Now, problem it was solving was consumers couldn't get onto the network because they didn't have the credit to buy the handset. That was the job to be done almost out there. It solved the problem for the telco. It solved the problem for the bank license holder, right? It was a triple win in that respect. But I haven't seen dramatic effect at this point in time of the huge successes, but we see it in parts. So you look at some of the big marketplaces out there, and one of the largest marketplaces that none of us would have used, but is Maersk.com, the shipping platform. I think it's, someone quoted it's the 5th largest e-commerce platform on the planet. Now, they have major payment challenges associated to their platform, highly recognized, but they are adopting and looking at where embedded finance can facilitate the shipping processes. Is it to do with the taxation on the containers that move around? Is it to do with the demurrage? Is it to do with the bill of ladings? Is it to do with the actual cargo movement? All of these components are slowly being looked at to smooth out the journey. I think that's what we're now looking at this. It's not just add a payment rail, add a card rail, add a bank account. It's actually, okay, we've got to solve a proper problem here and actually work through that, because if we solve problems, we delight our customers.
And I think this is something that I know, like it was said for a long time, but specifically I feel like in the last 6 months, these sentences get shared a lot more. You referred already to the story that I shared today about Metro Financial Services here out of Germany, who shut down, most likely what we are hearing for internal decision. Metro didn't want to focus on these topics anymore. But in a way, the topic of jobs to be done solve a real problem, right? I think what we've seen in the past, and I'm not going directly after Metro Financial Services, but rather at a couple of different companies who offer financial products because they can. We both have the past life, so to say, where we worked with embedded banking providers. And of course, know as well where multiple times, I know I personally reached out to a couple of companies. It's like, hey, why don't you embed banking in your product? It could make so much sense, right? But maybe that can be the starting point. Somebody from the fintech ecosystem telling you should consider this. If you're not solving a problem, if you're just selling the financial product because now you have a provider who can enable you to do it and you can finance it and you kind of like decorate everything around it that it could work, is not sufficient, right? What you really need is to solve an actual problem. And I think in the pre-chat, you also touched on that basically we spoke about where just building an outstanding financial product might not be that sufficient, right? What you really need to achieve is that this financial product, a financial product, you could say, is a commodity, right? How much more can you innovate in a financial product? Yes, there's more you can do. There's a lot of stuff to be innovated, but it's very often not the driving factor for the customer, right? What really is the driving factor for the customer, for the user, is how this financial product works with the main product.
Correct. So it's all about experience. As I said earlier, banks are pretty simple beast, although complex in their risk management and regulation. They do 5 core principal things, right? Moving money, holding money, lending money, investing money, converting it FX. They do 5 things. You could chuck insurance in there as the 6th element, but that's typically done through separate vehicles. So you've got 5 to 6 things that a bank does. How much more of that do I actually need as an individual, right? Mm-hmm. We talk about the Metro thing. I think that was largely because a huge consumer client base that they had. So tick, there's a big population that you could market this to. Are they buying on a frequent basis? Yes, they are, weekly and bi-weekly basis. So there's transaction volumes going through. So there's another big tick there. But I think the miss in all of this was the proposition research. And this I've seen time and time and time again when we look at current form embedded finance adoption, is that research can save millions in wasted effort. And it's something in the former life we prided ourselves significantly on, was making sure that the customer research was extremely diligent. And this is a skill bankers are not good at doing. Right? It was at a conference the other week speaking, what's the biggest problem about to hit embedded finance? I said, there's a lack of skills with those who know how to build a proposition. So design thinking skills, theory skills, research skills, all of these are new skills that bankers typically don't have. They just think about, is my product going to be reg compliant? Is it going to be able to be distributed? They don't think about the adoption of it.
Which is fair, right? Because it was always different in the past. It was not necessary.
Correct. Yeah. But we have to expect banks need to evolve, and we listen to Jamie, hang on every word that Jamie says, and banks need to evolve. Well, quite frankly, they do. It's with a completely different skill set. They're adopting AI at a great wave of adoption in that. In fact, they've been doing it for nearly 35, 40 years anyway. But the point really is that too many companies have jumped into it. They haven't created differentiation with their product. It's too parallel to existing products that the customer already has in their wallet. I was advising one of the top 10 e-com platforms in Europe, not the shipping one, another one, right? Based slightly more in a Mediterranean direction. 50 million customers, huge client base. And they started to talk to me about, right, we want to add embedded banking, we want to do wallets, we want to do FX, we want to do investments. The first question I asked them was, why? Because we've got 50 million customers. Some of them must want what we've got. I said, right, well, I can't understand what's driving this motivation. Loyalty, and they trust our brand. Now, there is a notion that I do buy into of brand trust. But again, we spin back to 2009, 2010, when that research came out that said people trust Apple and Nike more than they trust a bank. And that piece of research has been almost one of the tenets of what's driven embedded finance, embedded banking as well. Deploy banking, people trust your brand more than a bank. And that's not strictly true, because actually, if you flip that, the timing of it was post-global financial crisis. Everyone hated banks. 2, if you ask a slightly different question, not what brand do you trust more, bank or a Nike, if you ask the question, who would you trust more to hold $10,000 worth of your money, Nike or a bank? I'm very, very confident having done straw polling in this in audiences out there in all the various conferences I speak at, everyone says a bank. So we've used a false bit of research to almost justify the outcome to then move into these things. And this is what I was trying to work with this group in the Mediterranean around. Actually, just because you've got 50 million customers doesn't mean you should deploy wallets and investment products. However, if it means you can drive loyalty by saying, you've purchased 10 items through us, here's some voucher rebate, here's sitting in a digital wallet, spend it on our platform, or spend it in a coffee shop that's got a partner relationship with this particular platform. Now, there's a different dynamic, and you're building an ecosystem of financial behavior. Now, that's a long nudge steering methodology to go down, but that's more likely to return a positive result than just, here's a digital wallet, use it on our platform.
But in a way that would require the e-commerce platform you're referring to, or any other non-financial brand, or to have very in-depth knowledge of both worlds, right? I mean, what you need is understand both worlds to make it work. Because if you have, I don't know, on the one side, one team working on the financial products, and on the other side, the team working on the core product, and I don't know, you have like weekly or bi-weekly, monthly things to kind of make sure there's an integration between both of them, that's not going to work, right? You probably need a team or effort exactly at this intersection and think, how is it really going to work? And then when you have ideas or theories, verify whether the customer is actually solving a pain point. I mean, that one, and also maybe that's a follow-up question. You obviously, there's the whole story of like, we have a brand and customers come to us. Wouldn't you, I mean, in a way you could probably say like, some years ago that worked, right? I mean, in a way you can argue that maybe, I don't know, the co-branded credit cards from airlines or maybe even Amazon, in a way they're not really great embedded finance product either, but it seems to be at least like somehow successful. So is it then fair to say maybe those brands, or maybe a couple of years ago when fintech competition was not so high yet, it was a better time to launch the product and now it's too late?
I think we are, to launch co-brand is a little bit too late to the party, because it's become exceptionally easy to launch a co-brand card. You could, in a matter of weeks, send your artwork, get your provider in place, off you go. The reason why co-brand airline cards were so effective was, one, you got the credit, two, you got the repeat purchasing on that airline, which was the driver behind it. It wasn't the revenue, but it was the repeat purchasing behavior. So the lifetime value went up itself. And okay, you could argue as part of revenue, yes. But actually, the consumer's also getting all these loyalty points. My Amex BA card, I got all these companion vouchers, and I got these various Avios and Air Miles vouchers associated to it all. So it drove loyalty, but through another program, if you will, that was kind of running in parallel to it.
But would you say the loyalty feature alone is sufficient, or does it need something else? I'm trying to get to a point, looking at other industries, looking at other verticals, maybe those who are not embarked yet on the embedded finance journey. What are the requirements for somebody, maybe a listener out there who works in a completely different industry and tries to understand, is this now something for my industry? Can I check off the same boxes? So is loyalty alone sufficient? I mean, you can argue Metro Financial Services was doing loyalty with a 1% cashback on the card.
The loyalty is often geographically driven. It's often down to personal preferences and experiences that you've had way before you start adding financial services to it. We've seen forecourts try to offer branded cards and loyalty through cards. Reality is, you drive to the nearest diesel and petrol station. You go for convenience over loyalty. So there's those programs of, arguably, that's not fit for purpose when it comes to embedded finance. Now, I think where we're kind of moving towards is card. Everyone's got cards. I look at my mobile wallet and I must have 20 different cards in. Now, not all of them are credit cards, admittedly, but certainly don't need that amount of credit. But the point is that everyone's got a card to offer. And I'm kind of now at that point of going, I've got way too many cards. I'm actually scrolling through cards to decide what to pay with, which arguably the kind of thesis of curves, right? Yeah. But so I'm now going, well, hold on. If it's that easy to issue cards and you now offer a card solution, maybe you're a bit late to the party, unless there is a really specific client type you can go after. Offering 1% rewards, well, Amex have been doing 1%, 2%, 3% for donkeys now, almost 20 odd years. I think people have become quite cute to that, and we're seeing the interchange wars kicking in with various regulation changes going on as well.
Yeah.
within driven the mobilization of account-to-account payments, which moves out the interchange statement and cards basis. So again, there's a lot of competing threats on the whole story of interchange and card issuance or card service type business model. I think the actual model and use of a card will fundamentally change.
Okay.
To give you more flexibility. So previously you got a card and you use that to spend, essentially like a prepaid gift card type model. I think the way that cards will go with embedded finance is actually you don't even see the card, but the app, it's just the mechanism, it's the vessel of convenience to store funds on, because it's going through the Visa, MasterCard, or whatever it is, network. And then from that point forward, you make the choice of where you want to distribute it. Do I want to spend directly off that? So I use my virtual card on there. Do I want to move it to a bank account, or do I want to move it to another card that I use on a daily basis? Having that, so I think that's when you start to see these micro money movements that are going on out there, starting to use cards in a slightly different way than I have a card, I pay with it all the time, and I get rewards by using that card.
Interesting. And then coming back to the question, I mean, we touched on, as you specifically mentioned, a couple of areas. We touched on retailers, marketplaces, vertical SaaS, also all the hot areas, or at least let's say buzzwords in the ecosystem. From your personal view, where would you, if you were going after a specific area, is one of these, or maybe completely different one that's standing out, that has higher chances of succeeding with embedded finance? Or does it really depend on the individual company within that space and the products and the customers?
I think it's individual company. I think it's willingness to build the skill set required to succeed in it. I think it's the geography. We've seen companies roll out the same proposition that they have in the US across Europe, and it's fundamentally failed because there's different financial dynamics within market. One of the areas I'm particularly interested in is kind of the underworld of embedded finance, if you will, which is the infrastructure play. And infrastructure and banking married up with the infrastructure of non-banking. I'm very, very fascinated by things like the utilities industry. I think there's a huge problem in utilities is that consumers get a really bad deal. Utilities are not very good at managing money, as we're certainly learning in the UK and probably around the world. It's a similar sort of story. But they're managing vast sums of cash on a daily basis through direct debits, through rebates, all these sort of things that are going on. Their financial infrastructure is poor, very poor. So I sit there and look at, well, there's 1,000 jobs to be done. There's disbursement of funds, there's recovery of funds, there's collections, all these sort of things. All of these are what banks do and have the tooling to do that. So I'm currently working with a number of energy, water, gas groups to see, well, is there a better way of doing things using embedded finance? Can we build better financial journeys in the spectrum here of utility providers? Now, even if you look at energy settlement in the wholesale market, it's not even down to consumer level that you and I are more familiar with, but if you look at the wholesale markets, the clearing and settlement of energy is archaic. Yet, we're able to trade an equity and a bond on a T+1 basis, a trade +1, and it settles, yet energy settlement is anything but that. So why can't we use the principles of embedded finance, look at how we set up efficient financial systems in marketplaces out in the eBays of this world? How do they settle between merchant, supplier, buyer? Adopt what they're doing with things like virtual account structures, instant FX, multi-currency wallets. Apply that much more at the wholesale level where infrastructure is at play. So I think there's this whole new genre of embedded finance that's going to come out. It just requires someone who's got the stomach to do it.
So in a way, you would say what we have seen, maybe to loop back to the Angel Exchange intro question, you said it's not the hype cycle, so I'm not going to use that term, but obviously maybe the last 5 years gave a lot of room for a lot of companies to try and experiment. Some succeeded, obviously, some failed. And now basically the next phase, as you described, is going a lot more in-depth and understanding what the jobs to be done. And to be honest, I've not heard the utility providers too often. I did have a podcast episode, I think last year, where somebody from Evergreen was talking about an energy provider here in Germany using embedded investment as a vehicle for consumers to pay more per month, then invest the spare amounts and use that for potentially the final payment when maybe consumption of water or electricity was higher than initially expected, and then use that funds basically to cover that, to kind of have a little bit of a protection way. And in a way, you can argue this is maybe the job to be done, right? It's not about, I want to open up another investment account where I want to save money. Obviously, nobody really wants that. But if it's specific jobs to be done, that might work.
Yeah, we've seen this argument in the UK around the energy sector where people have been overpaying because of the winter coming up, and you build up a balance. And the energy crisis that we've had over the last 24 months, that people have said, well, I don't want that money sitting in an energy provider. I want it in a bank account. People forget that money is protected under UK government anyway. The money's never going to be lost. And arguably, you're better off putting 20 sat there on top of any FSCS protection you got in bank accounts, because you've got some really strong protections there of all your funds. But that's maybe for another way of manipulating the market. But what we're kind of getting at is actually some of these things don't need to be solved for, because they're efficient protection for the consumer. That being said, also not looking at the B2C proposition, I'm looking at this much more at B2B, or even E to E if you want to upscale that to enterprise. So when you've got companies shifting a couple of $1 billion a day back and forth for settlement of oil and gas contracts or energy contracts, and the efficiency in doing so is across multiple bank accounts and disparate ledger systems, there's got to be a better way to do this. And that's where I sit there talking with a number of these energy companies around, actually, there is a better way to do it. Build your own clearing systems, build a ubiquitous system that actually doesn't rely upon third-party bank accounts and manual reconciliations. So it comes back down to that story of efficiency. I think the next wave with the embedded finance is going to come from efficiency gains.
Makes sense. For the last part, I want to, maybe we spoke about banks previously already, but I want to touch one more time on the role of banks, and more specifically about traditional banks in embedded finance. I think the last 2 minutes we spoke quite a bit on the embedders, and I think emphasized that the jobs to be done that needs to be solved to succeed. Obviously, most of the embedded finance products that we see out there are powered by infrastructure providers / financial institutions. Obviously, here looking specifically at Europe, you're seeing a lot of startups with e-money licenses type of vehicles. Now, most recently, we've seen UniCredit acquire Vodeno. We're seeing SAB in Scandinavia with SMB embedded taking a stronger involvement there. What do you think, like in the next 5 to 10 years, how will other traditional banks think about this whole ecosystem of embedded finance?
I think this goes back to the original statement that I said, why has embedded finance kind of come about? Just become a mechanism for banks to distribute product. So yes, UniCredit, SAB have created these divisions because they're working on a kind of partnership model to deploy their tech in somebody else's ecosystem to grow adoption of their infrastructure and their bank accounts and payment rails. Their model is the more we put through it, the we reduce unit economics. So therefore, we're back in that platform economics game. But that's a race to the bottom, right? Because banking is a commodity. And I think this is the challenge with these new infrastructure providers that have surfaced over the years as well, that differentiation is not coming through my API is easier to quicker to integrate. It's not coming through that my KYC processes are more configurable than yours. It's banking as a service, it's adoption of it. But actually, I think where banks are really going to start to take fold is where they've got an existing client base. This is where they actually know the client. They've got the history of that client for the last 10, 20, 30, 40 years, and actually can sit with them to come up with new ways of working. So that's why I think SEB and UniCredit are, with their long-standing relationships, able to start to do some experimentation.
I also remember speaking with a German bank, I think it was last year, around the potential impact of embedded finance, and the bank, from my understanding, didn't look much further, but in a way, maybe looking specifically at banks that focus very strongly, let's say, on corporates or enterprise clients, would you say those banks should, if they can, probably invest some time and resources to understand what their enterprise clients are doing today? And I mean, in a way, It's not really like going out there and talking to the non-financial brand, the platforms out there, and think about, hey, let's intersect financial services into you, but rather my existing clients who are with me today, who knows if they're still going to be with me in 5 or 10 years. But if they don't bank with the bank directly anymore, then at least maybe with those platforms that I empower to offer these features, right? So do you think this is also a potential area where banks should do research and investigate what their existing partners or existing customers could use in the future?
I was very fortunate to be part of a conversation with a major German chemicals group who had a very strong digital offering through their own platform. Okay, they sold through their own traditional wholesale model, but they had a digital offering. And they were looking at how they could work with this particular bank to improve the supply chain models they were working on with their customers. And the bank sat there and there was a lot of back and forth and mapping and journey mapping, all that sort of stuff. That's where I think the banks have that role to play, trying to figuring out where their products can be configured, help with the traditional organizations out there. That I think is a good example.
Maybe those banks are not necessarily where we're going to see like in the next 12, 24, 36 months, big announcement of like banking as a service units to be launched, but rather in the shadows, in the background, doing some kind of efforts, opening up access and enabling these players, maybe not to serve everybody and kind of creating a lot of like inbound from the long tail, but rather launching specific solutions and embark on the journey in a way.
Yeah, I think you're right there, Lars. I think in a way that's consumable by somebody else to slap their front end onto it to solve a problem, then you don't have a distribution channel that everyone else has, and therefore you could potentially lose margin. So therefore having this sort of API-based banking solution, I would say, is becoming a hygiene factor for banks, particularly at the B2B enterprise level. B2C, you can still get away with using EMIs who then go into banks for safeguarding because they're much more agile, and consumers are incredibly fickle individuals. Behaviors change at a drop of a dime. So therefore you need that flexibility that an EMI can offer on that. You can't do that at an enterprise level. So I think you need both. I don't think the EMIs are going to eat the bank's lunch. I think actually you're going to see possibly a little bit more divergence in the way that we do embedded finance and the models and the way that we implement it between the banks and the EMIs. And I think we're going to see the banks actually looking to use this becoming a new way of selling. The traditional corporate salesman that said, my FX rate spreads are better than yours, my interest on yield accounts are better than yours, and we're a very trusted bank. Those three things as a message will no longer prevail for the corporate salesman. What they're actually going to say is, let me be consultative, let me understand your digital user journeys, let me figure out where you've got friction points in your user experience. Let me now see whether any of the banking solutions I've got can be configured to help with that. It's a very, very different skill for a bank to be able to adopt. And it's those who are using that way of working that are beginning to win. We see that with JP Morgan incredibly effectively.
Interesting. Maybe that's a good closing statement, so to say. So let's wrap things up. Obviously, we can maybe, if there are a couple of points or so, take it maybe for a future recording, dive a little bit deeper. But thanks, Paul, for joining. Thank you for sharing all your insights. If there's a listener out there who wants to learn more about you or to chat with you, is there a good way to reach out to you and chat?
Yeah, LinkedIn is the most easiest way to kind of find me. Very responsive on that. I don't have fancy websites, nothing as glorious as yours, Lars. Yeah, or just email me at paul@stapesx.com. But yeah, just reach out to me on LinkedIn and I'll always respond.
Awesome. Thanks again, Paul, and until next time.
Thank you very much.
Thank you for listening. For more episodes and our weekly newsletter, please visit embeddedfinancereview.com. And please reach out if you have an interesting embedded finance story to tell. Until next time.